Hello, my name is Naeem Aslam. I'm the CIO at Zay Capital Markets and Director and a Founder at Golden Gate Public Relations. This particular podcast, I have a special guest with me who has taken time out of his busy schedule, especially at this particular conference, to discuss about markets, macro, and it's something very, very important that we will be uncovering during this particular podcast. Of course, we won't give you all the information right at the beginning, but if you stay with us, there will be some special nuggets as a trader that we're going to go. So I'm going to hand it over to Aaron. Please introduce yourself.
Thank you. So I'm Aaron Hill. I'm the Chief Market Analyst at FP Markets, and my primary role at FP Markets consists of blending macro and technical analysis to form trading ideas, and so that's probably it.
Pleasure to have you.
Thank you.
Okay, so you are also someone who is actually an active trader in the market, right?
Yep.
So obviously you look at the markets at all the times, and then you look at whys and how far things will go. Now, when we look at the markets, especially the US markets where you focus the most of the times, the US indices, they are up massively, Aaron, massively, right? Especially if you look at them from the last time the Money Expo happened was in Mexico. I was in Mexico.
You have to look at them from the April lows, right?
Look at those, yeah. Like this is crazy. I was literally walking on the floor in Mexico, and then I saw a Trump tweet coming in.
Yeah.
The night before, I was sitting with my friend and we were discussing about trade tariffs. We said, like, man, this guy is like creating a real chaos.
Yeah.
How do you quantify chaos? Chaos is when S&P 500 drops more than 30% from its highs, and then that is what we were looking at it. And I was saying to him, I said, I am buying big. I am not afraid of this particular market, and I bought it at that particular day. So my first question now for you is, the US government is obviously in a shutdown mode. The Fed has no data to look at. So how you are trading this particular event, or what traders should look at from that particular perspective? Do you think that the Fed, let me make it even more simpler for our audience. Do you think that the Fed will cut the rate? That's the first scenario we're going to look at if they do not have the information.
If you look back at the Fed's SEP, they projected 2 rate cuts. This was before the shutdown though, right? So they projected 2 rate cuts, and markets are now pricing in. I haven't checked the market pricing, but I think it's around 50 basis points. So they're still looking at two rate cuts this year. I do believe that they will cut. I mean, you only have to look at the ADP. Last US ADP print. It's private. I know it's not the government report, but this is all we've got to work on, right?
Work on, yeah.
So if you look at that, that was minus, I think it was 32,000. It's pretty dismal. Yes. And I believe it's all about employment right now, and I do believe that they will cut, despite inflation. I think the Fed's largely looking through inflation right now. That's the problem. Even though it is elevated, it's way above the Fed's 2% target. So to answer your question, yes, I do believe the Fed will cut rates. I believe Do you mean like they will cut rate in October? October and potentially December, depending on how we go with the data, right? Because no one knows how long this shutdown's going to last, right?
Yeah.
If absolutely. It lasts, I mean, Trump holds the record for the longest ever shutdown, right? I think it is 35 days.
Yes, 35 days, yes.
If it goes longer than that, who knows? Because this can influence the US CPI data that's due out, I think, in a week or two.
Yes.
And this can really cause a lot of havoc with the markets. But yes, I do believe October they will cut. December, I still believe they may cut. Again, it's all hearsay.
Okay, so let's say that we don't get the data, right? Trump's and Democrats and Republicans, they hold their stance, very much so. Okay. And as a trader, you should be preparing for this kind of scenarios, because the 3 scenarios that we are going to discuss are the most important ones for you to pay attention to. So Aaron, let's say that the government is not opening up. The Fed does not have the data. Now, one scenario that we've discussed is that you said they will still cut the rate regardless of the US government opens or not. They have the ADP data to work on. They will look at the ADP data. They will say, you know what, we're going to cut the rate because Trump is in the office. Otherwise we will get fired. Yes. The other option, do you think that the FOMC meeting could actually be pushed back rather than saying, okay, we don't have the data?
I've not really thought. No, I don't believe so. I believe that they will keep the FOMC date later.
Meeting.
Yeah, sorry, the FOMC meeting later this month. I don't believe any of that will happen. I've heard a number of different projections for when the shutdown will end, but who knows? Really, who knows?
Yeah.
I think the main point is we do have employment down. Job growth is down. It's clear that's down. That's slowing. We do have elevated inflation, but I do believe that the Fed will cut rates in October and potentially in December. I think the question really is what next, right?
What next, yeah.
What next? I mean, if you look at the markets, I think the markets are pricing in more rate cuts than the Fed actually, especially for 2026, right? And that's the issue.
Yeah.
It's all down to the employment. I think the problem is we haven't got the employment data. We've only got the private ADP to go. There's a few surveys, I believe, that are released that do include it, but it's not even close to what the BLS released, right?
Okay, so we've discussed two scenarios, right? Number one, they get no data and they still cut the interest rate, right? So that is one scenario. The second scenario we've discussed, okay, maybe the FOMC meeting would be pushed forward. They will say, and you saying that is not going to happen. They will hold the, okay?
Look, I'm sure.
Okay. As a trader, you gotta be looking at all the three scenarios at the same time. So the third one, now let's say we are going into the meetings and this particular meeting in October, and then the Federal Reserve does not have enough data. They don't have the PMI dating, the government remains shut down in that particular case. But the Federal Reserve doesn't cut the rate. The Fed chair says, I do not cut the rate because I do not have enough data. Do you think that is a possibility? That's question number one. Number two, how market will react?
All right, so that was going to be how I really answered that. So I believe that will be a huge market reaction, because you've got markets. This is when the biggest moves happen, right? When money market expectations. If you're going to have to readjust everything. I think you're going to see a solid move to the upside in the dollar yields. I think equities will take a pop lower for sure. Gold will be lower. I dread to think what the market reaction. It will be a tradable opportunity for sure.
Now look at a scenario. Like for example, gold is up more than 47% year to date. It doesn't look like doesn't look like anything is going to blow it out, right? Out of inspiration, this rally is going to continue. But if this particular scenario can actually bring retracement,
that could be the catalyst, right?
Because you look at the chart, the gold is like this.
It's parabolic, isn't it?
It's parabolic. Like that chart is parabolic, and then nothing can stay like that. I can tell you with my 20 years of experience in the market, this could be one of them. It's just like one of those black swan events that we are pretty much looking at it. In terms of a market, but here's something, all right? Okay, gold is parabolic, the chart is like this, and we are discussing the third scenario, which is that, okay, the Fed doesn't cut the rate. Now, what's going to happen is gold will go up, dollar will go up, gold will come down. And one thing which you need to pay attention to is Donald Trump is going to get incredibly angry. I
was just about to mention that. I was thinking about this, incredibly angry. I would love to be a fly on the wall if that happens. And the message I dread to think the message on social media. I dread to think, but at the end of the day, if he holds, if it's not only the chair power, right? It's a voting committee. So if they vote to hold rates unchanged where it is. That is, the move will be insanely higher for the dollar and yields, and it really opens a door to a lot of a sizable trading opportunity, especially for those event risk traders. Right, trading out of event risk, unbelievable trade that would be. But I don't think that's going to happen. I just don't think that will happen.
Okay.
Because you know as well as I do, the Fed doesn't like to surprise markets, right? It rarely does.
Yes.
And if they do, the move will be
sick.
And that could be, you hit the nail on the head there, that could be the catalyst that not breaks gold, but causes a correction in gold.
Causes a correction.
Yeah.
So the most important word is correction, right? Because we are not saying
opportunity for sure.
Yeah, so that because we know that there's huge amount of a debt for the US economy, right? Inflation is a one-way road currently, it seems like it, even if you look at it from the last 10 years. So if gold prices drop, that would be the opportunity to buy. I mean, like I bought it back when prices were at 1600, and I'm still holding it, and I still believe the gold prices will continue to move to the 5,000 mark. Now the question really is, let's delve further into that one, and this is the last one that we kind of wanted to discuss, is there is a retracement in gold price. How far would it go? Would it go to 3,200, 3,400, 35? What are the technicals? You're a guy.
Yeah, there's given that we're all-time highs, there's no technicals, right? Where's the support? Because it's parabolic.
It's the
the only support I will be looking at is really, I'll be looking at the round numbers, I guess. I just looked at the gold chart. I'll be looking at the 3,005. I don't know.
What I was gonna say.
Yeah, 3,500, something like that. And but it's very difficult because that will be a strong catalyst for a good dip buying opportunity. But where is the question, right?
Where is the question?
Because you could use Fibonacci. I guess you could plot your Fibonacci ratios, but if that lines up with a round number, maybe, a big figure. But I'll be looking at the big figures, to be honest with you, because what more can you do? Moving averages maybe would be a good dynamic value for support, but other than that, you who knows where that would end, because that is a strong catalyst. But overall, there's more driving the price of gold right now than, even if we do get that catalyst, there's still so much supporting the price of gold, right? So it is, in my opinion, it's a strong dip buying opportunity. Where it lands though, whoa.
Well, let us know. What do you think about that one, and where do you want to buy it? I would personally want it to add more at level of 3,300. I would love it. 3,500 is not going to excite me too much. but if the price is going to go to 5,000, which they will,
do you think it will?
I think it would. I
think it's 4,000 now. It's just
it's just a hair away, right? So I think 5,000 is very much on the card with respect to that, and we will record another podcast on that topic: why gold prices could or would, or how they could reach that particular level. But with that and everything said, thank you so much for watching this episode. Stay tuned. Follow him on Twitter, and if you are bored, do follow us as well. Naeem Aslam 23, that is the handle. Thank you.
Thank you.